What if I told you there is one single terrifying number that secretly dictates the price of your gasoline, the stock value of Apple, and the financial stability of entire nations? It's not inflation, it's not a conspiracy theory. It's the dollar index, or DXY. This index is the hidden hand of the global economy, and right now, it's delivering a shockwave across the world. And the scariest part? It's all controlled by a few simple, calculated decisions made in a marble building in Washington, D.C.
So, what exactly is the DXY? The dollar index is essentially a report card for the US dollar. It measures the dollar's value against a basket of 6 major world currencies: the euro, the Japanese yen, the British pound, the Canadian dollar, the Swedish krona, and the Swiss franc. Think of the US dollar as the world's reserve currency, the default medium for global trade. If you're buying oil, gold, or even massive cargo shipments, chances are you're paying in US dollars. This makes the DXY more than just a finance number. It's a direct measure of global economic confidence. When the DXY rises, it means the dollar is stronger relative to those 6 currencies. When it falls, the dollar is weaker. Simple, right? But the consequences are anything but.
The real reason the DXY is so powerful, the scary reason we put in the title, is the Federal Reserve. The Fed uses interest rates as its primary weapon. When the Fed aggressively raises interest rates, it makes dollar-denominated assets, like US bonds, incredibly attractive. Global investors rush to exchange their local money for dollars to capitalize on the higher return. This sudden, massive demand sends the DXY soaring. It's a calculated move to fight domestic inflation, but it has devastating global ripple effects.
A rapidly strengthening dollar is great for American tourists, making Paris hotels cheaper. But for the global economy, it creates immense pain. First, consider emerging markets. Many developing countries have corporate or government debt denominated in US dollars. When the DXY jumps, their local currency buys fewer dollars. Suddenly, their debt payments become catastrophically more expensive. It's like getting a 20% interest hike overnight without warning. This can trigger instability, currency crises, or even sovereign debt defaults. Second, commodities. Oil, gold, copper, they are all priced in US dollars. When the DXY is strong, it takes fewer dollars to buy a barrel of oil. This can, in theory, help lower prices at the pump for Americans. But if the dollar is too strong, it can suppress global demand and damage the economies that produce those commodities. Now let's look at the stock market, specifically mega companies like Apple and Microsoft. These giants earn a significant chunk of their revenue, sometimes more than 50%, overseas in euros, yen, and pounds. Remember, this DXY jump was triggered by the Fed's interest rate hikes. This is the global reaction. When the DXY is strong, these companies must convert those foreign profits back into a more valuable US dollar. This conversion process is called the currency headwind, and it literally reduces their reported profits, directly impacting their stock price. So a massive, unexpected surge in the DXY often translates into a slowdown for American multinationals.
The paradox of the DXY is this: a strong dollar signifies strength and stability at home, but it often exports instability and financial stress abroad. The global economy works best when there is a healthy balance. So, next time you hear the Federal Reserve is raising interest rates, remember the DXY. It's more than just a number on a chart. It's the invisible force connecting your personal wallet to the massive, complex machine of the global financial system. By tracking it, you gain a vital understanding of the risks and opportunities on the horizon.
Which global financial indicator do you think has the biggest hidden impact? Let me know in the comments below. Don't forget to subscribe and hit the notification bell for more deep dives into the hidden forces that shape your money. Thanks for watching.